All right, so welcome back, guys. So this is the Chapter 11 review. We're just going to go ahead and... Now, we're only going to be reviewing just calculating the depreciations. I don't want you to worry too much about disposal of asset. That was just a part of Chapter 11. But I rather you focus mostly on the calculation portion, okay?
Okay.
So let's start with the first one here. All right. So says here that you purchased a machine for $2,050 with the sales tax was $169.13 and the shipping cost you $250. Okay. There was an installation fees that were performed by the company, okay, that you purchased the machine from, which was worth a total charge of $100. Okay, and this machine this machine will have a salvage value of $500 at the end of its useful life of 10 years. Okay. All right, and this machine can produce up to 30,000 units, and you put this machine into service on June 12th. Okay, use the units of production method. All right, excuse me. So, what did I buy?
A machine.
Can you tell me what the asset cost is?
Would it be 2569.13?
Let's see. So, you got the cost of the machine. You have to add the
Sales tax
and the shipping, plus the installation fees of $100.
Yes.
It is $25.69.13. Is that what you said to me?
Yep.
All right, awesome. That's it. Okay. So, next is there a salvage value?
$500.
$500. Okay. What's the estimated useful life?
10 years.
What's the amount that it can produce?
30,000.
And last but not least, what date did you place into service?
June 12th.
Okay. All right. So, let's start the first one. What is my depreciation basis?
The asset cost minus salvage value?
Correct. So in this case, the 2,569.13 minus salvage value of 500, what do I get?
2069.13.
2069.13. Good. Okay. What's my per unit rate going to be? Because we're doing units of production. Excuse me.
Units of production divided by useful life?
Not divided by useful life. So we need to find the per unit rate. I need to know how much it's going to cost me to produce one item.
Divided by asset cost?
No. So the depreciation basis is going to tell you what is the total amount that you can depreciate up to. How do I solve for a per unit rate? I want to know how much it's going to cost me to depreciate for every unit that I make.
Would it be one over the 30,000?
Not one, but the 30,000 is correct.
Okay.
Asset cost divided by number of units produced.
Close. Okay? It's going to be your depreciation basis divided by the total number of units that you can produce. Okay?
Oh, okay.
Okay, so here, what do you get?
0.7, 0.07.
They do that calculation again. So 2069.13 divided by 30,000.
Okay, 0.68971.
Okay, good. So now I need to know how much to depreciate. Okay, because the first year I produced 1,250 units.
Would it be 1,427 and 10
Mm,
cents?
no, how did you, what number did you use?
The 2,600 and 2,069.13.
No, I need to use the number of units that I produced that year
Oh, okay.
and multiply by the rate because I need to know how much I need to depreciate for this year.
Okay.
So this one's not basis times rate. This one's going to be number of units produced this year multiplied by the rate. Excuse me.
Okay, $86.21.
Good. All right, since we know the first one year is going to be that one, what's my book value going to be?
Okay. $2,482.92.
Good. All right. So what's my depreciation basis for year two?
It's going to be the same.
It should be the same, right? Your asset cost minus salvage value. In fact, they're all going to be the same. There you go. What about my per unit rate?
It's gonna stay the same.
It's going to stay the same because you got your depreciation basis is the same and your number of units produced that year is also the same. Okay? Now, what's my depreciation expense if I produced 2,900 units this year?
$200.02.
Okay? So what's your accumulated depreciation?
$286.23.
Good. So then what is your book value going to be?
$2,082.90.
Do that again. What did you get?
Um, 2,282.90.
Yes.
Okay.
All right. So next, if this year I produced 3,100 units, what's my depreciation expense? Excuse me.
$213.81.
Okay. The accumulated depreciation.
$500.04.
So then what is your book value?
Okay, what was the okay, I can see now. Two thousand
Excuse me.
nine and 9 cents.
2,069 and 9 cents. Good. Okay. Keep going. If year 4 I produce 3,050 units, how much is my depreciation expense?
$210.36.
All right. What's the accumulated depreciation?
$710.40.
Good. So what's my book value now?
$1,858.73.
Okay. If I produced 2,850 units this year, what is going to be my depreciation expense? Excuse me.
$196.57.
Okay. So then what is my accumulated depreciation?
$906.97.
Okay. So what's your book value?
$1,662.16.
Okay. So if I produce 3,200 units on year 6, excuse me. What's my depreciation expense if I produce 3,200 units?
220.70.
Good. 71 cents.
Yeah.
Okay. So therefore, my accumulated should be
$1,127.68.
okay. which will bring my book value to be
$1,441.45.
good. There's a couple more. So if year 7 I end up producing 3,400 units, what's my depreciation expense for year 7?
$234.50.
Okay. Accumulated.
$1,362.18.
Okay. Bringing your book value to be
$1,206.95.
good. And then year 8, if I produce 3,150 units.
$217.26.
Good. Am I accumulated?
$1,579.44.
Good. Bringing my book value to be
$989.69.
last two here. So if on year 8, or sorry, year 9, I produce 3,000 units, how much is that going to be?
$206.91.
Okay. Okay, book value is 1786.35. Bringing your book value to be
$782.87.
good. 78.
I mean 78. Yes.
Good. Good. And lastly, number 10. Okay, year 10, we end up producing 2,950 units. Excuse me.
Okay, $203.46.
That will give me an accumulated depreciation of $1,989.81. So, what is my book value?
$579.32.
Good. Now, question to you. Can I go for another year?
Yes.
Yes. Okay. How much? How much can I keep going for another year for?
The same salvage value.
Okay. Okay. How many units have I produced so far?
2,950.
28,850. So how many more units can I produce?
$1,150.
Okay, yes, 1,150. So in this case, I'm not going to make you solve that one. I'll go ahead and do it for you guys. So in this case, be that, it'll be that. Yes?
How come we don't have to like stop at a salvage value of 500 and just like depreciate the rest out?
You can do that. If you want to work backwards, that's fine. Because at the end of the day, the capacity is what we're looking for. We can't go over 30,000 units. So if you're relying on your salvage value, yeah, you could figure that out by working backwards. So taking your salvage value, then figuring out what your accumulated was, and then figuring out what your depreciation expense was, and then ultimately figuring out what your units would be left. You can work backwards, but if you're saying for year 10 that I should just write it off at 500, technically, can you do that? No. Why? You haven't produced your capacity yet. It's only if you went over your capacity is where you have to adjust it then. But in this case, I still haven't met my salvage value yet. And I already know by calculating that extra year, right? How much more can I keep going? In this case, I put my asset in service in June, right? So therefore, my asset's only 9.5 years old. It hasn't even reached 10 years yet. So in that case, that is exactly why I still need to also continue another year, or at least another half year, to at least get me to my capacity. So in this case, for units of production, we're more focusing on the number of units that you produced overall rather than your salvage value. Because at the end of the day, if you did this calculation correctly, you should pan out evenly at the end of the day. You should still get your salvage value exactly. Right? Alright. So, question 2 and question 3 here says go ahead and journalize the adjustment entry for the first and second year. So, how do I journalize my entries?
Depreciation expense.
Okay.
Accumulated depreciation.
Okay. For the first year, how much is that amount?
8621.
And what is your adjustment entry going to be for the year 2, for the second year?
Depreciation expense
Okay.
and accumulated depreciation.
For how much?
It's for 200.
For $202.
Yeah.
For 202 cents.
Uh-huh.
Good. All right. So that was units of production. Right. Next one, double declining. Excuse me, guys. I'm so sorry. All right. Number 4. You purchase a laptop for $890.99 with a sales tax of $73.51. At the end of its useful life of 7 years, um, it will have a remaining salvage value of $50. And of course, you put this laptop into service on January 8th. Use double declining method. Okay, so what did I buy?
A laptop.
Laptop. How much was my laptop?
$964.50.
Okay, $964.50. Good. How much is my salvage value?
$50.
It's $50. Okay. And what is my estimated useful life?
7 years.
7 years.
And when did I place into service?
January 8th.
Good. So in this case, right? January 8th. So when do I actually start depreciating it?
Now,
What do you mean by now?
you would be using it for the month of January.
Good. Correct. All right. So what's my depreciation basis going to be for double declining?
One, uh, 1 divided by the year times 2.
That's the rate.
Okay, the depreciation basis would be the
964.50.
$964.50. Good. In this case, it's the beginning of the year's book value.
okay.
So in this case, since I never depreciated at all, and it's my very first time, it's going to be that $964.50. It's going to be my asset cost. Okay. So now, what's my rate again?
1 divided by the year, which would be, what was the useful life? Times 2. So I got 0.28571
Good. So then, what is going to be my depreciation expense?
$275.57.
Good. Now I have a question for you. Do I need to make any adjustments or changes to this depreciation expense?
No,
Why? Why do I not need to make any changes to this depreciation expense?
because you'll be using your accumulated depreciation.
No.
Hmm.
Why would I be asking you that kind of question? Why do we need to adjust our depreciation expense?
The same thing.
What do you mean it's the same thing?
$275.57.
Okay, I'm not asking about accumulator now. I'm asking you guys, why do I not need to adjust the depreciation expense for this year?
Because you could be doing it at the end of the year because you bought it like in January.
Okay, good. And you place it in service as of January 8th, meaning you are going to depreciate it for the full year. Good. So that means you don't need to make an adjustment because you are going to be doing the adjustment at the end of the year. So this is what it is for the full year. Good. Okay. And yes, that's correct. Your depreciation, accumulated depreciation is going to be the same. What's my book value going to be?
$688.93.
Good. So then what becomes my depreciation basis for year two?
D688.93.
Good. So what's my rate going to be?
What is the formula for that?
The rate?
Yeah.
1 divided by the estimated useful life times 2.
Asset cost divided by estimated useful life times two.
Nope, no. 1, like the number 1, divided by the estimated useful life times 2.
Okay, that would be $196.84.
Okay, I'm talking about the rate right now.
It would be the same rate.
It would be the same rate. And you said you got how much? 100 and
$96.84.
Good, right? Because it's depreciation basis times rate. Good. So what's your accumulated?
$472.41.
400? Oh, yeah. Sorry. I forgot to add them. 470. Yep. So what's your book value?
$216.52.
Not 216. So in this case, what number do I need to actually be taken away from? The asset cost, right? Not depreciation basis or the previous year's books value. We need to look at the asset cost of $964.50.
$492.09.
Excellent. So in this case, year 3, what's my depreciation basis?
492.09.
Mm-hmm. What's my rate?
It's the same.
So now we're learning that the rate's gonna stay the same for all 7 years. Okay, so what's my depreciation expense for the 3rd year?
$140.60.
Okay. So what's the accumulated?
$613.
Good. And 1 cent, right? Because you got 41 cents plus 60 cents.
Okay.
So that penny. Okay. And therefore your book value should be
$351.49.
good. So then what's my basis for year 4?
351.49.
Good. Depreciation expense.
$100.43.
Good. Accumulated. $713.44. Book value. $251.44. Oh, six. Excuse me. 2516. Okay.
Oh, okay.
What happened?
I was subtracting the wrong thing.
Oh, okay. Right. Okay. So remember, it's always asset cost, not book value that you're subtracting or depreciation basis. Okay.
Okay.
So
Two
then
fifty. I got 25106,
250,106, good
and that's
for
gonna
year
carry over
five.
to the next year.
Mm-hmm. So year five, what's my depreciation expense?
7173.
7173, good. Accumulated.
785.17.
Good. Excuse me, guys. Uh, okay. So that will give you a book value of
179,433.
3 cents,
good.
and that's gonna carry over to year six.
Okay. Oh, Excel already calculated for me. So you should have $31.24. So that will be $836.41. So what's your book value at the end of year six?
$128.09.
So last but not least, year seven.
128.09.
Mm-hmm. You multiply your rate, you should get 3660. So what's your accumulated?
873.01.
Good. So then what is your book value at the end of year seven?
91.49.
Good. Now can you continue can you continue an eighth year?
Yes.
Yes, you can because the salvage value is not what it should be, right?
Right.
However, this is a laptop. Do you want to push it for one more year?
No, not really.
No, because at the end of the day, it's probably slow. It's probably takes forever to start up, and everything's gonna be very slow about it because it went way over its prime years. Right? The operating system is probably really old, and so on and so forth. So again, laptops are gonna be one of those things that the most you can get at a laptop is probably at anywhere from like 3 to 4 years max. Just because the way that you have to have the disk spinning, plugging it in, the battery won't hold its charge. A lot of things can happen, right? The buttons don't work anymore. Screen doesn't turn on anymore. A lot of things can happen by year 7. Okay. All right, so let's journalize the adjustment entry for the first 2 years. Okay, so first year and second year. So what's my journal going to look like?
Depreciation expense
Good.
and accumulated depreciation.
Correct. Okay, so what's my first year's accumulated depreciation?
Uh, the expense is 275.57,
Good.
and it's going to be the same for the accumulated.
Good. And then for my second year? What was my depreciation expense for the second year?
196.84.
Good. All right. Next one is going to be straight line. Okay. All right. So straight line. So example 7 here. Example 7 says that you purchased a table set for $770 with a sales tax of $70 and shipping costs of $100 with a $70 salvage value. Its estimated useful life is 7 years, and you put this table in use on August 21st. Okay? Use the straight line method. Okay, so what do we buy?
A table set.
We bought a table set. Okay. How much did my table set cost me?
$940.
So we got the asset cost of $770. We got to add the sales tax of $70 plus $100 of shipping. You got $940. Good. What is my salvage value?
Uh,
$70.
$70. And how many years useful life?
7 years.
Okay. And when did you place it in service?
The 21st of August.
So what does that tell you? When do I actually start depreciating?
September.
September. Okay. So what's my depreciation basis going to be for my first year?
The depreciation basis is going to be the
940.
Not 940.
$870.
870, right? It's your asset cost minus your salvage value. Okay? $870. Okay? And then what is going to be my rate?
.28.
Not 0.28. That's multiplying it twice as much. This is straight line. Do we need to do it twice as much?
no.
No.
0.14.
It's going to be 0.1428. Okay?
Okay.
And then, so then for the first year, how much is my depreciation expense going to be?
$124.29.
Is that true? Can I depreciate my asset for $124.29?
Yes,
Why?
because you only use it for 4 months.
So why would it be a total of $124.29? That's for the whole year. Can I treat my asset like it is 1 year old?
No.
No. So this is why I need to make my adjustment because I can't depreciate my asset for a whole year. It hasn't been a year yet. And you said it was 4 months old, right? Because you're gonna place
Yes.
it into service as this date, so you're gonna treat it like it's September 1st. So September, October, November, December, 4 months.
3107.
3107. No, how did you get 3107?
I divided it by 4.
Okay, okay. Um, you divide it by 4. Okay. How many months are in 1 year?
12.
Okay, so in this case, I want to know what 4 out of 12 months is.
It it's 0.33333.
It's okay. You got that 0.3333. So go ahead and
Yeah.
multiply it by that $124.59.
Okay, you said $124.
124. Oh, 124.29.
Okay.
Okay. So if I go ahead and do that, 124.29.
4143.
If I divide that by 12, that's going to give me $10.36, right? And if I take $10.36 times 4, because there's 4 months, it'd be $41.44. Okay.
Yes.
So again, I think it's the easiest if you just go ahead and multiply straight across, right? I want to know what 4 out of 12 months is going to be, right? Which is, there you go. Well, this says 41, 40, 43. Okay. So what's my book value going to be?
$898.57.
898.57. Good. Okay. So then year 2, what's my depreciation basis going to be?
Uh, $870.
$870. Good, that's correct, right? Because it's your asset cost minus salvage value. What is your rate going to be?
Uh, it's going to be 0.14285.
Good. It's gonna be this, right? It's gonna be the same number because 1 divided by 7. All right. So this time,
That's going to be $124.29.
good. So then accumulated depreciation.
$165.72.
So then book value.
$774.28.
Okay. Excuse me. Depreciation basis for year 3.
$870.
Oh, yep. It's still going to be the asset cost minus salvage value. So in this case, all 7 years is going to be the same. What about the rate?
It's going to be the same.
Yes.
How come before we were taking like the book value and then bringing it over to the other year, like the next year, like we were going 870 and then 774 or 898 and then 870 then 774 on the previous chart.
Because that's double declining. The depreciation basis is going to be the beginning of the year book value. So in this case, not all the depreciations are going to have the same exact formula. That's why I had you guys go through every single one, because I need you to be able to see the difference between them. Double declining is because I'm depreciating it twice as fast. Okay? And that's why I need to use the beginning of the year's book value as my depreciation basis. But for my straight line and for my units of production, it's going to be the asset cost minus salvage value. If you need me to explain like why it is like that, I can't tell you that, because in this case, we just have to understand that for the double declining, right? We're trying to depreciate the asset as fast as possible, right? That's why we're multiplying it by 2 for the rate, because we're trying to essentially cut the asset cost in half and half and half and half and half, or book value in half and half and half, right? So in this case, for a straight line, you don't need to do that. You just need to figure out how much you can depreciate overall, and then spread it across evenly amongst the asset's life. Okay. All right. Number 3. So for year 3, right? What would my rate be?
The same.
It would still be the same. It'd still be 1 over the estimated useful life of 7. So in this case, all 7 years are going to be the same. So then what about my depreciation expense?
It's going to be the same.
It's going
124.29.
to exactly, because here my depreciation basis is the same. My rate is also the same. Basis times rate, if they're both the same, you're still going to get the same expense for all 7 years. Right? Only difference now is I have to just keep calculating my accumulated to get my book value. So in this case, what's my accumulated depreciation for year 3?
$290.01.
So that will bring my book value down to
$649.99.
good. What's my accumulated depreciation for year 4?
$414.30.
Mm-hmm. So what's my book value now?
$525.70.
Mm-hmm. So what's my accumulated appreciation for year 5?
$538.59.
Mm-hmm. Which will give you a book value of
$401.41.
good. Um, what is the depreciation expense for year 6? I'm sorry, accumulated depreciation for year 6. Excuse me.
$662.88.
And then for book value for year 6, book value for year 6.
Okay, hold on. $277.12.
Good. And lastly, I'll go ahead and solve this one for you. You should be at $152.83.
Yes.
Now, question, can we go for an 8th year?
Yes.
Yes, you can. Why?
So you still have some book value to it.
Yes, but what else?
Um, it's fallen way below the
The salvage value?
No, not in this case. Right now, it's above salvage value right now.
yes.
How old is my asset?
Okay, you still have like that 4 month period.
Okay, so right now I only depreciated 4 months out of a year. So that means I still got 8 months left to use on my machine.
Right.
So in this case, I'll go ahead and solve for you. Um, the everything's going to be the same except for this number is going to be different, right? Because I still have 8 months left on this, right?
Right.
So therefore, if I go ahead and multiply it by that 8 years or 8 months, excuse me, 8 months, that's going to give me $82.86. And then that's going to give me accumulated depreciation of $870. So therefore, $69.97. Ooh, that is way off. That should be exact. So in this case, this is supposed to be $70. So you're gonna have to adjust this part right here because this needs to be exactly $870 even. Okay, to make it a $70 salvage value. Hold on, let me see what it was before. Oh, I'm off by 3 cents. So therefore, If that's the case, I need this to be $83.83. There you go. So I may have to be adjusting it by a couple pennies, but that's okay in this case. As long as you know that the salvage value has to equal 70, but at the end of the day, we know that we also have 8 months left of the asset that we can still depreciate. Okay. So I want you to journalize the entry for the first 2 years. So how is my journal going to look like?
Depreciation expense
Depreciation expense.
and accumulated depreciation.
Good. So what was the first year's depreciation expense?
$41.43.
Okay. And then what was the second year's
Uh,
depreciation? Hold on, give me a second. Depreciation expense.
124.29.
And it's going to be 124.29 for the next 5 years after that. And then the
Right.
last year, you're going to depreciate for the last remaining amount. Okay. Good. Last question here, or concept, is amortization. Okay, so let's take a look. You purchased on October 10, you purchased a license for $550, okay, with a legal fee costing $50, okay? And a lawyer fees costing $1,000, okay? Its estimated useful life is 10 years. So what did I buy?
A license.
You bought a license. Okay. How much did that license cost you?
1,600.
Excuse me. You got $550 for the actual license itself. You had to
Right.
pay $50 for the, um, you know, what
The
is it?
fee.
Yeah, for the fees, the legal fees, and then you had to pay $1,000 for the lawyer. So in this case, 1,600 is correct. Right? Is there a salvage value?
No.
No, right? That's the huge difference between the depreciation and amortization is there is no salvage value because at the end of the license, it shouldn't have a life. You have to go and renew it. So in this case, no salvage value. What's the estimated useful life?
10 years.
10 years. And when did you place it into service?
October 10th.
October 10. Okay. So that means, what does that tell you? When do you start depreciating it?
You depreciated in October.
You depreciate it in October. So what's my amortization basis?
$1,600.
It's just 1,600 because in this case we don't have a salvage value. So that means your amortization basis is just going to be your asset cost. What's my rate going to be?
$10.
10%, right? 1 divided by the estimated useful life of 10 will give you 10%. So in this case, what's my depreciation expense for the first year?
160.
Is that true?
No.
No. How old is my asset? I can only depreciate it for how many months?
3.
You can only depreciate for 3 months, right? October, November, and December. So in this case, no, I cannot depreciate the first year for $160. How much can I depreciate it for? So 3 out of 12.
0.25.
0.25. So 0.25 times 160 gives you
$40.
$40. So therefore $40. So what is my depreciate or sorry, what's my book value going to be?
$1,560.
1,560. Okay. What about year 2? What's my depreciation basis going to be?
1,600.
It's going to be 1,600 because again, the formula is going to be the asset cost minus salvage value. There is no salvage value, so it's just going to be your asset cost. Right? What's my rate going to be?
It's going to be 10%.
It's still going to be 10% because it's still 1 over the estimated useful life of 10. All right? So therefore, what is my depreciation expense going to be? Amortization expense.
$160.
160. So what is my accumulated? Excuse me.
200.
$200. So therefore, book value is going to be
1,400.
$1,400. Okay. So what is my amortization basis going to be for year 3?
The same.
It's going to be the same, right? So therefore, they're all going to be the same. They're all going to be the asset cost. What about my rate?
The same.
They're all going to be the same. It's still going to be 1 divided by 10, right? So in this case, what's my expense going to be?
160.
It's going to be the same all the way through because basis times rate. If you have the same basis and you have the same rate, you're going to produce the same expense. So in this case, right, what's my accumulated depreciation for year 3?
360.
360, which will bring my book value to
$1,240.
1240. So what's my accumulated depreciation for year 4?
$520.
Okay, good. So what's my book value going to be for year 4?
1,060.
Good. 1080. So it's 1600 minus 520 should be 1080. Right? Last one, I'm not going to make you do all 10 years because it's all going to be the same.
780.
680. Right? 680. Depreciation book value.
920.
920. Good. Okay. So once again, let's go ahead and amortize the adjustment entry for the first and second year. So how is my journal going to look this time?
Depreciation expense.
Not depreciation, right? We're looking at an intangible asset.
Oh gosh. What it be? License?
Not license. We can't directly take it off from the license. So, what's another word that we use to represent the word depreciation for intangible assets?
Oh, is it
Yep,
mm,
you got it.
amortization?
Amortization, expense, and then what else?
Uh, sales tax payable?
No, this has nothing to do with sales tax payable. So remember, it's exactly identical to depreciation. Only thing that you're switching out is the word
The word-
depreciation.
So it'd be accumulated amortization.
Correct.
Okay.
There you go. All right. So what's the first years that I amortize this license?
40.
$40. And then for the second year,
It's going to do the same amortization expense, amortization accumulation.
mm-hmm, for how much?
160.
160. Okay. Excellent. All right. Okay. And that is the review for the depreciations. Okay. Any questions?